I'm Linda McCauley. I'm delighted to be back with you on your behalf. Well, and of course the last thing you probably think about when you apply for a benefit is, will you have to pay tax on it? Are benefits taxable? Or does it depend which benefit you're on? And is the onus on you to tell the taxman? And what happens if you're working as well? Well, on your behalf, heard from a woman who's got a substantial tax demand. She's working, her tax is deducted at source, and she's receiving Carers Allowance. Now, she told the tax office, and more tax has been coming out of her monthly pay packet, but she's still facing a very big bill. So I asked tax expert Adrian Houston what has gone wrong.
The main benefit that's affecting this case certainly is Carers Allowance, which is fully taxable, whereas on the other hand, Disability Living Allowance is not taxable. There's a list of benefits, there are probably 10 or 12 common benefits, and unfortunately some of them are taxable and some of them aren't. And it's always a good idea if people Google HMRC taxable state benefits.
We'll put that link up from our website, so that'll help a little. And if you go to that link, will that explain it?
Yeah, that will certainly set out where which benefits are taxable and which aren't. But for example, in terms of the common ones, Carers Allowance is taxable, Employment Support Allowance over 25 is taxable, as is long-term incapacity benefit.
But who's tells the taxman when you get this benefit? I mean, does the taxman know automatically, or do you have to tell them?
You have to tell them, and you should never assume. It would be logical to think, oh, the government knows they're paying me this. But you should never assume that HMRC knows you're getting a benefit. And if you get a benefit which you will be told is taxable by the people paying it, you should make contact with the revenue as soon as possible, because then they can adjust your tax code as soon as possible and prevent the risk of down the line you getting a nasty tax bill as has happened to this person.
So you have to rely on having the right tax code?
That's the easiest way for you to pay your tax, assuming you've got a job. If you don't have any job and don't have any other state pension, then a bit of Carers Allowance probably won't produce a tax bill, because you're allowed to earn £8,000 a year before you pay tax.
But you still have to tell them?
You should still tell them, yes, exactly.
And fill in a form every year? Not
necessarily. It depends. The revenue may ask you to fill in a form every year, but if you've got the tax code adjusted to, in other words, to reduce your allowances at your job by the amount of the estimated state benefit, then the effect of that is that come the end of the year, your tax should be roughly right, and the revenue might just every couple of years ask you to write to them and tell them how much Carers Allowance you got.
Well, this person has got quite a substantial bill, it has to be said, and it's going back a number of years.
Yes, that's right. I mean, this is the problem, that the revenue has recently brought in some new computer systems, and they're only now getting to cope with the arrears and looking at the older cases. They're seeing that, oh, look, now that we can finally join up the dots, this person's pay-as-you-earn income plus their Carers Allowance means they haven't paid enough tax. And then it's down to the person to consider whether they've already tried manfully to tell the revenue about all of this. And if they have done all that in lots of time, there might be a case for the revenue to write it off, but that's actually quite tricky to achieve.
So if you have told them, it's worth keeping a note of what and when and who you spoke to?
I couldn't emphasise that more to you, Linda, because the problem is that people say, I rang the revenue. Well, when did you ring them? Oh, I'm not sure. Who did you speak to? Oh, I didn't write it down. So write down the date and time of any call and the person you speak to and what you said. That's always useful if you ever have to make a complaint. But in terms of getting the tax written off, you also have to show that you believed your affairs were in order. And that's a tricky thing, because if you're contacting the revenue saying, you'd need to change my tax code, and they don't, then you cannot say, oh, well, I believed my affairs were in order, because actually you knew you were waiting on a new tax code and it never arrived. So the most important thing is, as early as possible, contact the revenue, say, I've got a tax issue, this is a taxable benefit I'm now getting, what do you guys need to do now? And then they'll adjust the code, and hopefully by the 5th of April you won't owe much tax.
Can you tell by your code? I mean, they're just numbers and letters to us, but is there a way of knowing if you're on the right code?
Well, there's a standard code, which if you're not receiving a state benefit or anything like that, your code at the moment would be 810L. The letters after it, ignore what they mean. Basically, think of your code in general, unless it says K, Your code times 10 is your allowances. Your allowances these days are 8,105, the amount you can earn before you pay tax. So that's a standard code, and that's a code where the revenue is not trying through your code to tax, for example, rental income or carers allowance or some untaxed interest you receive elsewhere.
What about pensions, for example? They're taxable, aren't they?
Pensions are fully taxable, your state pension or your occupational pension. The difference is that an occupational pension is taxed at source, and you'll get a tax code at that. Whereas your state pension, there is no mechanism for taxing it at source. So if you have some other income, like a job or an occupational pension, then the revenue will adjust your code. They will take from your allowances there an amount equal to your state benefit, and then give what allowances it might be left against your job. So it might seem rough that you're paying a lot of tax through your job, but the aim is that by the end of the year, you've paid tax on all of your income.
Should you also talk to the person who does the payroll if you're employed, if you're an employee? Do they need to know what's going on?
They don't need to know what's going on because that's confidential between you and HMRC. But in general terms, if you've any concerns, your payroll clerk will quite often be able to be quite helpful and say, oh, you need to ring the tax office about that. Here's the number to give. Here's the reference to quote. Your main reference is your national insurance number. But the payroll clerk, they're useful bodies for getting advice from, but actually they can do nothing to change your tax code, and they don't even know what makes up your tax code. The revenue simply says to them, change this guy's tax code to such and such, and the payroll clerk has no choice but to do it. So your contact ultimately always has to be to HMRC.
You mentioned the better, I use the word better computer system rather loosely, but
Right.
that they're going further back these days. We did hear this week from a listener who emailed saying that she's got a bill for nearly £1,500 going back to 2009-10. And again, they wanted to fill out a self-assessment form, make arrangements to pay. Now, she's in a difficult situation because she was made redundant. She's back working now, but the job's paying less than they want her to pay, and it's a temporary contract. If you owe them money and there's no way round it, can you make arrangements to pay it off more slowly? What should she do?
Yes, I mean these tax bills that are arriving out with people, they will typically arrive on a form which on the bottom left says P800. And with these tax calculations, while they issue these bills, I find the revenue is both slow to chase up the tax demand, and secondly, they are amenable to alternative ways of paying them. The most common way I would advise people to think about is ask, can it be taken out of your tax code for the following tax year? So if you owed £1,000, say £1,200, then you could say, well, look, could you take it out of my tax code from April 2013? And that would mean that via the payroll, you would lose an extra £100 a month out of your pay. And that means the revenue is effectively giving you an interest-free loan. It'll still hurt, but it'll hurt less, and it'll hurt less than going to the bank for an overdraft or going for your savings.
Spread the load. And if you can't afford to pay it off in one tax year, can you spread it over longer?
Sometimes the revenue can be persuaded maybe to take it out of 2 tax years. You would be lucky to get them to take it out of 3, but if maybe they were looking for 2 or 3 years tax and it was amounting to thousands of pounds, they might do it over 3 years. You will not get longer than that. And do bear in mind that if you have savings and having your pay-as-you-earn salary every month reduced, you might prefer, albeit it's painful, to take a bit of your savings and pay some or all of the tax that way, just to get it out of your hair. I appreciate how frustrating and how painful that can be.
And if you've no savings?
And if you've no savings, then the revenue will have to take it out of your pay because they're not going to bankrupt you over this.
That's a hollow comfort, I'm sure. Adrian Houston, tax expert. You can follow the link from the On Your Behalf website to the HMRC site Adrian mentioned, so you can check if the benefit you're on is taxable.